Introduction. In this video, I'm going to explore 5 key questions. The first is, what is natural capital? The second, is natural capital important? The third, is the decline of natural capital a concern? I'll then explore the question of how do we value natural capital? And finally, the most important of all, how do we move to a nature-positive economy? What is natural capital? Capital, at its most basic definition, consists of assets used for the production of goods and services. Viewed purely through an economic lens, our planet's biodiversity and natural systems are essentially a capital stock, similar to other forms of capital, such as financial capital or man-made capital. Natural capital is defined as the world's stocks of natural assets, and natural assets can be split into 2 categories. Non-renewable assets such as oil, gas, coal, and minerals. These assets can only be used once and are running out. For example, based on current consumption levels, the world has about 47 years of oil left. The second category are renewable assets such as fisheries, farmland, and forest. These assets can, in theory, keep giving us benefits forever. For example, as long as the North Sea fishing stocks are not overexploited, people will be able to enjoy fish from the North Sea 100 years from now. However, there is a critical threshold with renewable assets. If the stock is depleted past a certain point, the capital is no longer able to regenerate. Renewable natural assets provide a wide range of benefits to us. These benefits are commonly known as ecosystem services. They include healthy soils and crop pollination that make food production possible, storm and flood protection, capturing carbon from the atmosphere, clean water and clean air, habitat for wildlife, genetic resources for drug discovery, timber, fish, and also spaces for recreation and well-being. Natural capital and the goods and services it provides us underpins our daily lives and our economy. Is natural capital important? The World Economic Forum estimates that $44 trillion of global GDP, around half, is highly or moderately dependent on nature. The Dutch Central Bank recently released a report that found that 36% of the total assets of Dutch financial institutions, over 500 billion euros, were lent to or invested in sectors with high dependency on ecosystems. So the financial system is heavily dependent on nature and the services it provides us. Financial institutions themselves are therefore exposed to reputational and transition risks if they finance companies that have major negative impacts on nature. Sadly, natural capital is in decline. To quote Mark Carney, "We've been trading off the planet against profit for too long. This has depleted our natural capital, had devastating effects on Earth's biodiversity, and is causing unprecedented changes to our climate." It is estimated that natural capital has declined by 40% in just over 2 decades, and that human activity has severely altered 75% of the Earth's land surfaces, resulting in large-scale degradation. The blunt truth is, our economic system only values a tree when we cut it down for timber or it's cleared for agriculture. It doesn't recognize the value of a tree alive in the ground. Financial markets do not recognize the value of natural capital unless it has a defined cash flow or asset value that can be measured by current economic systems. As a result, the full value or costs of using or destroying natural systems are poorly understood. For example, forests are highly connected ecosystems. They are home to 80% of the world's biodiversity, supply water, mitigate climate change by capturing carbon from the atmosphere, and provide livelihoods for over 1 billion people who are dependent directly on forests. But historically, these positive externalities are not taken into account, and the value of a forest is often reduced to its annual revenue yield of timber. By extension, natural capital is not typically recorded on corporate balance sheets, which means it is undervalued in financial decision-making. Is the decline of natural capital a concern? Time is running out. All stakeholders need to be aware that by depleting natural capital, our activities are causing a triple crisis. The first is climate change. The recent IPCC report gave a code red for humanity. 50-degree temperatures are 3 times more likely to occur per year than they were 30 years ago. The past 5 years have been the hottest on record since 1850. And the ability of tropical forests to absorb carbon has declined by 1/3 since the 1990s from the effects of warmer temperatures and drought. The second crisis is biodiversity loss. Wildlife populations have, on average, declined by 60% since 1970. Over half of the world's fish stocks are in a state of collapse or being overexploited. And there is the potential for our actions to cause the loss of 1 million species. Habitat loss will make the likelihood of pandemics, like the one we're living through right now, more likely. The loss of insects and pollinators will affect harvests and food security around the world. And at least 25% of all modern medicines are derived either directly or indirectly from medicinal plants, so the loss of plant species will impact our medicine. The third crisis is water. 2.3 billion people live in water-stressed countries, of which 733 million live in high or critically water-stressed countries. Water stress means when the demand for water exceeds its supply for a given area. Water stress is a global crisis and acutely impacts many developed countries. For example, this year, 41 of the 58 counties in California were in a declared drought emergency. It is clear we need to invest into nature if we are to reverse the decline of natural capital. According to the UN and World Economic Forum, by 2050, the total needed to invest in nature will amount to $8 trillion. A report by the Paulson Institute and the Nature Conservancy estimates there is a global funding gap for biodiversity of over $700 billion per year. There are a number of different mechanisms that can be used to bridge this funding gap, including investing in natural infrastructure. Coastal wetlands, for example, saved more than $600 million in property damages during Hurricane Sandy. Biodiversity offsets. For example, property developers in the UK pay for biodiversity net gains credits to offset the loss of any biodiversity resulting from a new development. Carbon markets. For example, an airline buying carbon credits from nature-based solutions to offset the emissions of their flights. Green financial products. For example, the African Development Banks issuing a green bond to conserve forests in Uganda. Sustainable supply chains. For example, Unilever investing in their supply chains to be deforestation-free by 2023. And of course, governmental budgets and tax policy. For example, Biden's $2 trillion new Green Deal for the US. How do we value natural capital? There is a growing consensus that we need to account for the value nature provides us. The Descriptor Review, published in February 2021, was a landmark report commissioned by the UK Treasury and urged the world's governments to come up with a different form of national accounting that includes the depletion of natural resources. The Task Force for Nature-Related Financial Disclosures, or TNFD, was officially launched in June 2021. It would deliver a framework for organizations to report and act on evolving nature-related risks to support a shift in global financial flows away from nature-negative outcomes and towards nature-positive outcomes. The TNFD will complement the great success achieved by the Task Force for Climate-Related Financial Disclosures, TCFD, which has become a global standard for reporting climate-related risk and opportunities. Similarly, the Capitals Coalition, made up of 380 global initiatives and businesses, is championing the Natural Capital Protocol, a decision-making framework that enables organizations to identify, measure, and value their direct and indirect impacts and dependencies on natural capital. How do we move to a nature-positive economy? Nature positive means enhancing the resilience of our planet and societies to halt and reverse nature loss. In the same way financial investors look to diversify a portfolio of assets, it is important that the natural ecosystems we invest in are biologically diverse. Ecosystems that are more diverse with lots of plant life and wildlife are healthier and are proven to provide a greater flow of ecosystem services than non-diverse ecosystems. For example, forest areas with lower biodiversity are likely to have less resilience to climate change and will provide less sustainable flows of ecosystem services into the future. Both public and private markets have an important role to play when it comes to investing in nature. They need to understand the drastic consequences of not accounting for the true value that biodiversity and nature provides, but also the economic opportunity of a nature-positive world. The World Economic Forum laid out 15 pathways for businesses to transition to a nature-positive economy, which could generate over $10 trillion in annual business value and could create 395 million jobs by 2030. Conclusion. To sum up, over half of the world's economy relies on nature. Natural capital is in decline and is driving a triple crisis of climate change, biodiversity loss, and water stress. We have to value nature and the goods and services it provides us and move to a nature-positive world where a tree is worth more alive than dead. Financial institutions are a crucial part of the equation to achieve this and must invest to protect and restore nature at scale and at speed before it's too late.